The economy is growing, stocks are near record highs, but here's a question. Why are there so few public companies? That's right, the number of public companies has been shrinking fairly dramatically over the last number of years. Let's find out the answer to that question and welcome in Jerry Davis, a professor at the University of Michigan's Ross School of Business and the author of The Vanishing American Corporation. Jerry, thanks for joining us. Where have all the corporations gone, or at least the public ones?
Yeah, it's a really shocking thing that not everybody's picked up on, but there were about 8,800 listed corporations in the U.S. in 1997. It dropped into about 4,100 in 2012. And a few things happened. You have to look at what happened to the ones that disappeared and why aren't there new ones showing up. So the ones that disappeared, there's four sectors that account for most of it. The first one is software. The dot-com bust wiped out about 1/5 of the companies that disappeared. Second, banks, consolidation. Every town used to have its own bank. Every major city had a commercial bank. Now there's 4 big banks left. There's computers and electronics. That's offshoring. And then there's pharmaceutical, where it's sort of economies of scale. So in all of those sectors, there are a lot more corporations disappearing, either being delisted because they can't make money anymore, or being acquired and consolidating. So that's where the shrinking happened. Why aren't there so many IPOs? It's a fascinating question. There were about as many IPOs in the last 5 years as in 2007 alone, or in 1997 alone, which just seems crazy.
Is it possible that there's so much venture capital and private money out there that companies don't need to go public, at least not yet?
Yeah, that's a big part of it. One thing is that there's new ways to intermediate capital. You don't have to go public. And honestly, if you don't have to go public, why would you? There's regulations.
To get rich, though. I mean, that's why, let's be frank, a lot of companies, that's how you get paid.
Yeah, that is true. And yet there's not nearly as many as you would expect. If you want to be an operating company, oftentimes being funded by private equity or private capital is going to be a better bet. But it does seem like a puzzler. If it's such an easy way to get rich, why aren't there more IPOs?
It's a good question. Do you expect this trend to continue? And I guess the market implication, if it does, Jerry, even if it just stays the same, is that if more capital goes in, investors buy in, but there's fewer companies, that seems like that'd be good news for the equity markets.
Yeah, the equity markets have bifurcated in a really crazy way. If you look at the S&P 500, 3 passive index funds own 18% of the average company. Step away from that, and it's a much, much tinier proportion. So the equity markets are in a really odd situation now. There's reasons to avoid being public if you can. If you really want to be in it for the long term, going public has a lot of reasons a lot of things to avoid about it.
You think this is the sign of things to come, Jerry?
Well, it has felt like that. So the Jobs Act was passed in 2012. That was supposed to make it much easier for firms to go public, and yet bupkis, the market tripled under Obama, and yet IPOs still stayed flat. So I don't see a giant upsurge of IPOs in the coming 5 years.
I like that. Bupkis is a technical term. Jerry Davis, thank you. Thank you very much. We appreciate you coming on, author of The Vanishing American Corporation. Professor, thank you.
Yeah, thanks very much, Brian.
Sure thing. Folks, thank you for tuning into Trading Nation. As always, interesting stuff there. We'll see you next time. Take care.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.